Hello everyone. Today we are going to discuss on one of the critical topics, which is promoter share pledging. So there are various types of pledge. Now if you are an option trader, then you can pledge your shares or mutual fund portfolio, even your bond portfolio, and use it as a margin for your trading, option selling. But we all, as you know, the group is not for traders, it's for investors. So whatever I am talking here is not actually about that pledging. It is mainly I'm talking about the company, a business, the promoter. They are pledging the shares. So what is a pledging? All those things we will discuss in detail. So you would be hearing that Adani Group, they have got a lot of listed companies and a lot of shares are pledged. So I thought that I would explain in detail about promoter share pledging. So by pledging shares, promoter of the company borrows loans to meet the company's operational requirements. The share pledging even can be for funding other ventures, like in case of Adani. Many companies use this share pledging for their working capital requirement. Regarding working capital requirement, I request you guys to go to my working capital video and see that and understand what is working capital, then come back here and listen to this video. Even the banks, basically the lenders who is giving money or lending money to the various businesses for funding their business needs, they may find the company's profit not adequate enough for them to lend the required amount required for the capex of the company. So to meet their capex requirements, the bank may ask the company to pledge their shares. So once they pledge their shares, in addition to the profits made by the company, the bank is also confident enough that if the company is unable to generate profit, they can consume the share pledge with them, and they can even own the company to that percentage of shares pledged. So this is sort of an additional assurity for the bankers or the lenders. If the pledged shares is significant, which is a large chunk, then this can be detrimental to the investors. This can affect their investments and their investments become risky. Generally speaking, this share pledging is the last resort for a promoter to raise funds if no other means are available for him. The main issue with the share pledging is that the issuer of the funds or the banker or the lender can encash these shares and take over these pledged shares if the promoter is unable to repay them. So to recover the dues, the lender can take over the pledged shares, thus owning the company for that particular number of pledged shares. Basically, as I mentioned, pledging is nothing but it's like a gold loan, I would say. Like the promoter company is like giving or telling the lender that I am giving this much shares of my company to you and you keep it with you, and I'm like giving it as a proof for my borrowings or the capex requirements. And if you feel that I'm unable to repay that, you're always having that pledged shares and you can encash them. So many times some companies hype their stocks based on brands. I will not take the names. So once the market capital goes high, the price of the stock goes high, the pledging also can be reduced because they had pledged for some particular amount. As the stock goes high, the pledge share quantity is the same, so the amount which is being pledged also will go high. So to reduce the amount to the original amount, the company can always reduce the pledge. So for doing that, many companies try to hype the stock, like what I have told earlier in my video of money laundering through stock market. I request you to go there also and have some insights from the video. So if the stock is really bullish, then the pledge is not an issue. But if something bad happens to the company and the investor sentiments is affected, and if the stock price goes down, the pledged shares will not be adequate for the lender, then the reverse case happens. So they may have to pledge more shares. So this is really considered as a red flag. But if the company has strong business fundamentals, the free cash flow is really good, the working capital management is really good, the debt levels are very low, then if a small amount of pledging is there, this is not a red flag. You have to really monitor it, but this can be accepted. If in case of a default, the banks can sell the shares which is been pledged by the promoter and they can liquidate it. And if the pledged shares are very high, then the open market selling of these pledged shares can cause the stock to go very low. So the selling of these pledged shares can lead to reduced promoter holding And also, as the promoter shareholding decreases, then there will be more infusing of shares into the open market. So as we all know, as the promoter holdings goes down, this shows that the promoter may not be interested much in the company, or the promoter may not be held responsible much for the company because they own only a very small portion of the company. So this again is considered as a red flag. Now to state some examples, so not all share pledgings are bad. So for an example, a company J Kumar Infra Limited, they are into infrastructure development. For meeting their working capital requirements, because the business is capital intensive, they are taking up large projects, they have a huge amount of order booking. So to meet their working capital requirement, they have to lend from borrowers. So the business is always capital intensive, so they have decided to pledge their shares. So they are having a total promoter holding of 46.6%. So out of which 22.7%, which is half of that promoter holding, is pledged. But if you see, for past several number of years, the pledge percentage has been constant. So if the company is performing well, if the revenue is going up, if the debt levels are reducing, and if the return ratios are increasing, and the pledge amount is not increasing and it is constant, then you can monitor the company, and you may not be fearful, or you may not bother about the company going down. Another company which I have invested into is Aster DM. So Aster DM is having a promoter holding of 37.9%, out of which 10.4% is pledged. Now there are a lot of other companies who are having shares being pledged. So Vedanta, if you see, the promoter holding is 69.7%, out of which the 100% is pledged. So that is really a red flag. But again, you can use your own intelligence and due diligence and see how to invest. Now to state a real case example of share pledging and their issues. In 2009, if you remember the Satyam scam, they had pledged their entire stakes of promoter holding as pledge, which is against a security for the loan. When the Satyam scam unfolded, the entire pledged stock was sold in the open market. So you can imagine how much would the stock would have plunged in their value on this open market deal. Another typical example is in June 2020, the future consumers Kishore Biani and family had pledged 92.5% of their stakes. In June 2020 itself, the share plunged to 47%, added by the COVID-19 lockdown has severely hit the business of the company. So it has led to the end of such a business. So to conclude, my advice would be like, just don't ignore great businesses who are having some amount of share pledging. First, look into their cash flow statements, look into the free cash flow, what is their debt levels, look into the working capital management, what are the profit margins they are having, how is the revenue increasing year on year. I would say easily a pledge of below 10% is much acceptable. But even some companies which I hold, like J Kumar Infra, the pledge is almost 50% of their promoter holding. So you have to do your own due diligence before investing into such businesses. There is risk in that, but if you know about the company in and out and their business prospects, you can analyze it and invest. Before concluding, as I was talking about the hotcake Adani Group, so Adani Group, if you have a look into it, Adani Green is having 60.5%, out of which 2.2% is pledged, that is the promoter holding. The Adani Port is having 13.1% pledge out of 77.3% promoter holding. Adani Enterprise, out of 66% promoter holding, 38% is pledged. Adani Power, out of 75%, 25.3% is pledged. And Adani Transmission, out of 73.9%, 5.9% is pledged. So majority of the Adani companies has got share pledging. Probably this is because they want to expand the business. They are in the stage of expanding the businesses, all the businesses. So they are diversified. They are entered into many businesses. So the capital requirement for expanding the businesses is very high. So majority of the businesses are not having much profit. So the funding from the lenders are difficult. So they would be forced to pledge some amount of shares so that they get funding and they finance the various projects. So hopefully, if the projects are successful and profitable, then they may end up reducing the pledge as well. But as far as I am concerned, if you are not clear about the businesses, then if the business is having a share pledging, it's clearly a red flag and not to invest in such businesses. Hope the session on share pledging is clear to you. If you have any doubts, you can comment in the comment box below. So see you in next session. Till then, happy investing.